It's 9:06 a.m. in London when we're recording this, and it's July 30th, 2018. So in the middle of the summer, some markets are a bit quiet, as you can just see here on our homepage. Euro dollar is up by 11 pip, pound dollar by 33 pip, Bitcoin is up by $59, crude oil is up by 23 cents, whereas gold is down with 63 cents, and the S&P is down with 2 points. Sort of the big news really since we talked last time is that strong decline you saw in the stock markets, in particular in NASDAQ, on the back of Facebook declining and on the back of Twitter declining. And that pulled down the S&P as well. What's also interesting today is that today is the first day for the new ESMA rules, which is the European sort of agency for securities, and retail traders trading on CFDs and spread betting across Europe can no longer trade with 200 times leverage as they used to, sometimes all the way up to 500. Anybody that is with these FCA or maybe BaFin or CySEC, any sort of European regulated broker, their European clients are not allowed now to trade with 200 times leverage. That as well is probably going to alter the markets a bit. Not sure how much. I hope very minimal impact, but we never know. Retail traders at times we all trade quite huge volumes aggregated, so it could have a bit of an impact. So we'll see what happens. Now, before we look into the markets, as always, I need to stress that trading financial markets unfortunately is risky, and there's a risk that we'll lose all of our invested money. There's a little link here, a risk disclosure statement, which you can click on to read more about that. As well, good morning, hi, good morning, Antonio, and good morning, Mr. Beats. Thanks so much for joining us. Good to see you guys here. If you have any questions during the presentation, then just use the chat box. If you're not on the chat box, get yourself a YouTube account. That would allow you to ask questions, say hello, and also like the videos. If you like it, don't forget hit that like button before you leave today. Okay, so let's begin, and we're going to begin today with the dollar index. Again, it's the middle of the summer, August is big day, and as well, at least in the UK, since pretty much I think last week, all the kids are on holiday, so holiday season for children as well, so a lot of people are taking time off. They're not actually trading, and you can clearly see this here on the dollar index, how the market is trading sideways. But hopefully that's going to break at one point. And as this headline says here, US economy grows at the fastest pace since 2014, with a growth of 4.1% year on year. Quarterly annualized return. Now, if that continues, guys, this most likely just one way for the dollar, that is upwards. So take out that June high and potentially reach 97.87 for the dollar index. And that, of course, is going to have a strong influence on things like the euro. So if the euro trades below 115.07, which is its June low, then I think this market can trade down to 113.12, but I think it could eventually reach maybe as low as 111.14. And if we sort of look at the economic growth, if it remains strong for very long periods of time, then if we're trading back at 105 eventually, then that would not surprise me. Of course, the markets are not always in a situation where, just because you have high economic growth, that you're going to see higher currency. Because the market moves ahead of events. So the dollar is not here today because of the 4.1% growth in economic. It's not here because of the 4.1% economic growth. It might be here, but people that traded that idea traded when the euro was up here probably at 123. So now we just received that numbers. So obviously if the numbers don't continue to perform, then maybe this can go to the upside. Now, trading is not a bet on necessarily on economic numbers like that, but I think that if you have another very good GDP growth like the one we just had, then the Federal Reserve will most likely continue to raise interest rates. and that is going to increase the rollover cost to be long the euro, and people are generally just going to be more interested to invest more in the euro than in the dollar more than the euro. So if we take out the June low, I don't think there's going to be any hesitation for the market. They're going to try to sell, push it down to 113.12 and then maybe 111.14. On the other hand, if things change, maybe the Fed changes their inflation target, Donald Trump is trying to do that, then we might trade about 117.90, probably quickly go to 118.51, and then we'll see if it hits the upside, but most likely higher. So break the July high, and I want to be bullish for push, and then we'll see if it goes all the way up to 119.97. And then we'll see. If you look at this from a big picture perspective, this is your head, this is your left shoulder, this is your right shoulder. So maybe we'll have some sort of move to the downside. Here is the Euro CAD, which I did an article about last week. Have a big head, left, and potentially a right shoulder in place. Obviously, we need to break below the line here to turn bearish. And even in the Euro Aussie is trading sideways for now. But if the Euro Aussie trades below 156.96, then I think this market could potentially go down to 155. So I do foresee more Euro weakness, but obviously all of these markets are trading sideways. So for now, we just need to wait for the market to develop or break any of these levels. This is Bitcoin, and we talked about buying Bitcoin on a dip at 79.39, so 7,939. This was pretty much a little bit less than a 50% correction. The market bounced nicely, and we're still technically, let me just hide that. We still haven't breached the upside. So there's no change to the outlook. If the market decides to move down to the same levels, I do think again people will try to buy. I think eventually we will be able to reduce the stop loss to the low, which means that you would have max risk of 100 and, well, what is this really? I think it's $14. Yeah. Oh, it's about, no, 100 and, yeah, about $150 or so, which is really good given that we had a stop loss here down here. So no change to the outlook. I think traders will be buying here. The alternative is we just took out the high and we push up to the May 14th high. Is there any challenges with this? Well, there is one challenge, and that is that Ethereum, Ripple, all these other coins are not in an uptrend. They're trading sideways. So right now it's just Bitcoin leading the way. So it's a very fragmented sort of development. I mean, this is Ethereum. Take out 515, then yeah, I'll turn bullish. Probably target something like 720 or maybe even higher. But we're not there yet. And with that in mind, it's a little bit of a warning sign that maybe Bitcoin is not going to trade much higher than where we are. Maybe we'll trade a little bit higher, but the way this is looking right now, it wouldn't surprise me if we have another situation like this one we had here where the market just tumbled. Remember, we turned bullish down here. So if you grab some of this, you did a good job. Here's the price of gold, and this is a 4-hour chart. And as you know, I almost got stopped out here, and then a few days later here again, but the trend is still bearish at 1236, so there's no real reason to change the bias. If it swings back up to 1225, I do think traders going to sell with stops just above the high, and I think we can move down to maybe 1204, and then we'll see what happens. Here's the price of crude oil, and crude oil for me still remains in a sideways market. Of course, things have narrowed down a little bit, so I think we can potentially reduce this level here, but we're still trading. We still have a bit of a bearish bias without a doubt. But if you look at this from a daily chart, as I said last week, if we take out the high up, down and up, then I think traders will probably rather go long than short above this level. And because it's hitting straight into support here, I don't want to sell just here. But I think if we trade below 67.03, we could have a quick scalp, maybe 50 cents or something like that, down to the low, and then we'll see what happens. Finally, German DAX. German DAX moved all the way up to the high and is trading sideways for now. They're good and bad. You have Facebook, of course. You have Twitter. You have normal sort of profit taking. And then you have the trade deal between US and EU that might develop into something good. So I think that is influencing the DAX and European stock markets in general. And I think eventually we're gonna probably head to the upside. So I think here though, from a technical point of view, I would like to see a pullback, maybe down to 12,600, 12,640, and then potentially turn bullish from here. The better markets to trade, and if you take a look at the technical analysis section, I did post, I think it was the US 30s of the Dow Jones. Shared that with you guys last week, and that's really a better idea, I think. Let's see if I can find it. Maybe it's just my memory. Maybe I never shared it with you guys. Yeah, I think if I did upload it, I don't know exactly where I saved it. Yeah, I did actually produce something on July 26th. So here's the Dow Jones 30. The price took out the June 11th high, and you have the low here from the July 10th. I'm bullish above that level, and we're obviously having a bit of a pullback, but I think eventually potentially up to the February 27th high. I'll send you the link. That's the link for that article. Actually, I can't send it to you. Let me. Can I send you the link? You can actually just click here, news, stock market, and S&P and Dow Jones. The reason for mentioning that is that the DAX is trading sideways on the daily chart, which I don't like. And my experience with trading sideways pattern is that you win some, you lose some, but in general, you lose more than you actually win. So because of that, I am boycotting the DAX. I'm not trading this or touching it until we have some nice well-defined pattern. And for now, the only pattern I see is the March low, and then you have the January high. We need to break these levels before I think it's fair to assume that we're gonna trade much higher or much lower. So there you go, I just sent you the link to that. Thank you, Mr. Beats. So high says possible head and shoulders in the DAX with 12,660 would be a nice place to look to go along. As a down target, you mean? Okay. Let's take a look at it. Okay, possible head and shoulders in the DAX, you mean? Okay. Okay, sorry, I misread. Let's take a look at the DAX. Head and shoulders. I don't know. I don't actually see any head and shoulders here. I don't understand. Fortunately, I don't understand what you're looking at. Okay, I think we're gonna wrap things up. Hi, most welcome to send me a chart to AlexFX00, which is my Twitter handle. Just to send me a tweet and mention me, and I'll reply back to that. I think that's the easiest, so I can see exactly what you're looking at. I think again the DAX, it might be doing, diamond formation or something like that, but I'm not sure, to be honest. So could the DAX hit 13,000 this week? Yeah, it wouldn't surprise me. Like from a risk reward ratio perspective, it's up, and I think in general stock markets are bullish. So I think it can go up. The question is this though, like from where do you want to be buying? If one is not in the market, it's not really ideal to buy right now. But if you have your own system that can give you a good risk reward ratio, so sort of derive stops and things like that for you, then why not? My own system is much more basic. It's literally just put a fib on top of it. And you might have a corrective move, maybe almost 50%. And then maybe from these levels, potentially look to get involved again and doing something like this. So there's a potential reward of 2.6% versus a potential risk of 1.81. So that would be 2.6 over 1.8. That's 1.44 times our risk. So that's relatively okay. It's not amazing, but it's relatively okay, especially for sort of the short-term stuff we're doing here. Okay, guys, we're gonna wrap things up. I want to thank you so much for being with me here this morning. Don't forget to like the video, and I'll see you guys tomorrow at 9 a.m. London time. Thank you.